Hey guys, and welcome back to FSM Trading. I'm going to be talking to you about the 5 mistakes that early investors and traders make in the market, and I'm hoping that you guys don't have to go through everything that I went through and make sure that you are the most profitable you can be. So please do, if you could, like, subscribe, comment on this video. If it is helpful, all the videos coming out and the content coming out, please do that, because it will help it get liked and subscribed by more people, and the more people that see it, the more people that can be helped. The first mistake I would say that all early investors make is following signals groups, following these companies and shiny materials that come on Instagram or social media, all the ads that pop up, and believing them straight away because they have one conversation with somebody and they think that it's the right thing to do. Following signals from anywhere, it's something that everybody seems to promote at the moment, is signals or some sort of scheme to make you invest. Maybe even being that you put in £1,000 and they'll trade your money and you get £10 every day or something like that. And those schemes, sometimes they work and more often than not they don't. I mean, if I type in on Google here, signals, look, there's literally ads upon ads that just pop up, companies upon companies popping up all over the place that offer certain amount of pips per month or money coming in that you're guaranteed, and all of these things. I think that's the first mistake that early investors make and traders make. I would say the first thing you want to do, learn the skill, learn your craft. I will also put in a free course that I have for any traders and investors in the links below, which should be able to help you guys to be successful. Learn the skill. You want to have this skill for a lifetime. You don't want to give it to people yourself. You want to have that skill to have. So that's number one. Number two, I would say, is not understanding the trading and investing language. So making mistakes early on, that would be not understanding the difference between, for instance, CFD and invest. So some people that are coming onto a platform to invest, such as maybe even trading 212, as you can see here, there's a clear difference between CFD trading and investment trading, or ISA, where you want to invest your money. Now, CFD, to make it aware to you guys, I know a lot of people still make these mistakes, even the people in my group chat or early investors or early traders. CFD trading is trading the price of the product or the good or service or company or stock. You're trading at price, meaning that you can make money, you can bet on it going down or going up. You're trading the price of that particular good or service. That means that you can trade with leverage. Even if you have £10 in your account, and you trade on a 1 to 10 leverage, you can trade as if you have £100. Investing is not that. Investing, you can only make money if that particular stock or good is going up in price. If I buy Tesla stock £10 worth, the only way that can improve to £20, £30 or £40 is if Tesla increases to go up. So that would be my number two. Don't make those mistakes. I wouldn't make the mistake of not understanding language. You've got to understand what CFD trading is, what leverage trading is, what investing is, what's the difference between the two before making that jump. So that would be my number two. Number three, always going to be the most significant, no plan. There's never seems to be a plan with early traders and investors. What is my exit plan? Number one is an exit plan is part of a plan. When I buy this stock, when I put in this for this particular trade, if I'm trading pound dollar or euro yen or anything I could be, why am I getting to this position and where is the exit plan? Where's my stop loss? Where's my take profit? What am I doing along the way? What's the purpose of what I'm doing? So I think a plan is always needed. Even a plan further than that, understanding what type of trader you are. Many people have a 9 to 5 job and doing trading on the side. You can't be a scalper or a day trader. You're not going to have the time to be looking at the charts consistently. You're going to be more of a swing trader, somebody that is placing a trade on a Monday, wants to get out on the Thursday or Friday. Day trading, you're going to be sitting at the screen making sure things are done. If you're investing, also have an exit plan. If I'm putting in £100 in this particular stock, I want this to hit 400 based on all the fundamentals I've done, on the research I've done for this particular stock. You want to even understand what broker should I be using. Plan. Look at the different 3 or 4 brokers out there and say, this is the particular broker that's going to give me the best. Know what brokers charge you as a fee. Know these things before trading. Ask anyone teaching you along the way what that is. And again, I'll add some links in below, but I do think the best trading platforms for beginners, I would say Trading 212 is up there number 2, but I think NAGA is still number 1 in my opinion for all levels of investing and trading, from stocks to cryptos to Forex. And I'll also add a link to that below if you aren't aware of that particular company. They also do offer the best leverage and spread in my opinion as well for early beginners as well, and the ability to social trade and copy trade, meaning that you don't have to sometimes trade yourself, you can copy industry professionals. How do I know that? Because I've researched before I've started trading and investing, which is also what you should do. That's my number 3. Number 4 would be FOMO, fear of missing out. That seems to be a huge one when it comes to traders and investors. We all trade off news, so we're looking at, oh, this guy's made £1,000 of Tesla. I wonder if it's a good time to buy. Always the question is, when should I buy? When do I get out? What do I do? I wish I bought earlier. Always the argument. Now, a huge one I'll use, I can look at the example here, is Bitcoin. Now, 2017, we saw a huge spike in Bitcoin, similar to the one we're seeing now in 2020. But in around October 2017, the price of Bitcoin was £5,000, $728. And by the end of 2017 it was all the way up to around $20,000. So 19,000, didn't quite touch 20,000, but 19,000. So many people at the 19,000 mark began to say, oh, all the coverage on the news, we should buy it. Remember, trade the news, go against the news. Once it's on the news, it's probably already happened. So everyone here in 2017 was saying, yeah, it's the best time to invest in Bitcoin now. It's going to go to 100K. And fear of missing out has got them to invest £100, £200. Some of them have put all of their salaries into this, all their savings into it, and all of a sudden their money has halved in price. It's even gone lower than half. They've lost almost all their investment, and they are now not excited about Bitcoin as they were at the beginning because they've lost their money. But all it came from was fear of missing out, following everybody else. Again, tying into number 3, not having a plan. Don't just dive into these things. You must do your own research. I'm not a financial advisor. I'm just here to help and advise, in quote, to help you be a better trader and investor. So do your own research. Don't take my word as gospel, but do your research. And if your research is correct, hold on to that stock. If you know it's a good price that you've brought in, if it's a good trade you got in at, then continue on your path. But know that you've done the research to back it. Don't just be scared along the way. That's my number 4. My number 5 is that people, or early investors, early traders, are too emotionally attached to their investment or their trade. Many people I've seen smash computers, or worse than that, give up too early, too emotionally invested. Be very, very desensitized from trading and investing. It is a tool to make you money. That's what, don't make money bigger than it is. It's a servant. So if you put your money into a particular stock and you've bought well, hold it. Don't be emotionally attached. That's when you start making silly mistakes. You get out of a stock too early and you miss a rise. I've done that myself. Or you hold on to a stock too long thinking it's going to do something, and you lose out on that money. And a wise person did tell me, if you're having a good week trading, it might be a good time to bank in your profit. You might not need to trade the rest of that week because you don't want to turn it into a losing week. And similarly, if you're having a losing week already trading, you might need to stop trading and not trade the rest of that week because you don't want to lose any more. Don't be emotionally attached to the money. Be emotionally attached to your plan. That's the main thing that I want to get across to you guys today. And again, I'm not a financial advisor. I'm just here to help. So please do like, subscribe, comment on this video. Please, let's see if we can get this to more people. If they have been entertaining, if they're helping you and the content's good, and there will be many more to come. So speak to you guys soon.